Hello friends, today, I will share with you a strategy that can achieve very high profit rates in the tests I have done many times back. But let me briefly explain how this strategy came about. As you know, the greatest technological wonder of recent times is the artificial intelligence called ChatGPT. So I asked ChatGPT to create a very effective strategy as it is popular these days. He also created 2 to 3 different strategies, which are normally very classic and most popular indicators, and explained in detail, but I wanted him to create a strategy with a slightly unusual combination. Obviously, it wasn't very unusual again, but it gave me an important clue. I optimized the combination he wrote a little more with my own experience and reached a great result. Now I will tell you about the strategy that ChatGPT organized and wrote the trade rules one by one, and I brought it more effectively. We will use Keltner channels, Ichimoku clouds and the RSI indicator along with Heikin Ashi candles in our strategy. For a long position rule 1. RSI should cross the EMA line on the upside. Rule 2. The price should be above the green Ichimoku cloud. Rule 3. Price should close above the Keltner channel midline with a green candle. Rule 4. The stop loss level must be below the last low swing. Rule 5. This rule is more flexible than the previous rules and can be chosen within the framework of the trader's risk management. Regardless of which profit level is preferred, if the price reaches the profit level in 1-to-1 ratio, some profit should be taken at that point and the stop loss level should be lowered to the trading entry level. In this way, the preferred profit target can continue without risk.
The target can be statically expected to 1-to-1.5, 1-to-2 levels in classical methods, or by applying a more flexible pattern. If the price closes a candle below the midline of the Keltner channel, the trade is closed. If this path is followed, much higher profit can be obtained or the trade can be abandoned early. Please do not forget, before entering a trade, define the rules of your strategy and do not revise it after opening the trade. This is a very important issue.
Let's take a quick look at another long position example. Rule 1. RSI should cross the EMA line on the upside. Rule 2. The price should be above the green Ichimoku cloud. Rule 3. Price should close above the Keltner channel midline with a green candle. Rule 4. The stop loss level must be below the last low swing. Again, we have 2 different target options. One of our targets is the classic style with 2-to-1 payoffs. The other option is candle close below the Keltner middle line. As you can see, in this example, both exit options yield the same profit rate. In this example, shortly after trading, the red candle falls below the Keltner channel. In this case, we skip it because a very recent breach has occurred, or we close 50% of the trade at this point, reducing our risk level to the trade entry point. This is a trader's choice. Now let's look at our rules for opening a short position within the framework of our strategy. By the way, if you find my work useful, please like the videos, subscribe to the channel and share the videos. Rule 1. RSI should cross the EMA line on the downside. Rule 2. The price should and below the red Ichimoku cloud. Rule 3. price should close a red candlestick below the midline of the Keltner channel. Rule 4. We enter the trade at the close of this candle. The stop-loss level should be above the last high wave. There are two options for the target, and this choice is all about the trader's own perception of risk. A. With a conventional method, the target could be 1 to 1.5 or 1 to 2. B. After entering the trade should be closed when the price crosses the middle band of the Keltner channel upwards or at the close of the first green candle. In particular, I would like to remind you again. If the price reaches the profit level equal to the stop-loss level, some profit should be taken and the stop-loss level should be pulled to the trading entry point. Thus, higher profit targets can be pursued with zero risk. Let's take a quick look at another example of a short position. Rule 1. RSI should cross the EMA line on the downside. Rule 2. The price should and below the red Ichimoku cloud. Rule 4. We enter the trade at the close of this candle. The stop-loss level should be above the last high wave. There are two options for the target, and this choice is all about the trader's own perception of risk. A. With a conventional method, the target could be 1 to 1.5 or 1 to 2. B. After entering the trade should be closed when the price crosses the middle band of the Keltner channel upwards or at the close of the first green candle. As you can see, the classical take-profit methods yielded more benefit in this trade, but the Keltner channel take-profit strategy yielded a very small profit. As I said at the beginning, no strategy can be expected to be 100% successful, and each strategy has its own advantages and disadvantages. I hope this strategy is very useful to you. It is very simple to use and you can use it in all time frames if you wait for all the rules to occur and open a trade. As I mentioned at the beginning of the video, I had the ChatGPT robot do the combination of this strategy and I made minor adjustments to make it more effective. It gave good results that really surprised me. I will share with you by making different strategies with ChatGPT artificial intelligence robot. Don't forget to subscribe to the channel so you can be instantly informed about my next videos. See you.